Hello everybody, welcome to another video here on the channel. This is episode 9 to my Chart Annotations Review Series. So if you are new to this, check out the first episode, work your way up. You'll learn a lot about the way I trade and a lot of the models I use that especially go with SMTs, macros, right, etc. And again, feel free to check out my Discord. There's a free trial, free access to a course that you guys can try out. And so, yeah. Getting started with identifying our bias. If I go to daily, right, we're selling off. I don't know how this works in replay mode. I don't know if this is the actual day or if this is where I am at in the time of the day. But this might be where the whole end of the day is. Let's just go to the 4 hour. So 4 hour, you can see that we have been respecting every bullish for value gap. You see we respected this one, respected this one right here. None of them closed below this wick. I respected this one, right? We've been respecting every 4 hour for value gap, and we've been having a massive run up. So yeah, this is actually, this daily right here is sort of the end of the day. So this kind of does sort of, it sort of does basically show us where the end of the day is. It sort of spoils it for us. But you can see that with time and price, if we're trading below, above daily open before market open, so for example, daily open that starts at 6 p.m. the previous day. Since we've been trading above it this entire time, I do expect the end of the day to be below it, right? That's with time and price. So going into this, if we go to the 15-minute here, I do just want to see structure. So are respecting off this 1 hour fair value gap, and does look like we're heading down and we're heading into this 1 hour and 15-minute. So that's something to keep in mind. This indicator, though, you can see it with this indicator. The indicators that I have is the daily, weekly, monthly, and yearly opening, fair value gap by Nephew San, ICT kill zone. So this shows us where London and Asian session are. This does look like it could be seek and destroy. Maybe that's what that is. I still haven't really fully understood it, but when does London end? Actually, I'm not going to play action yet. But you can see Asia and London, or actually Asia's high was taken. So we have London low way down here. So that's going to be a liquidity target. I'll actually do this. So Asia, and then London. I don't really care much about it at the moment because we have not exited out of there yet. London, where's this thing at? Okay. And then I got macros. So I'll sort of explain everything going into this. All right, so here this is 4:55 a.m. very, very early. I just started charting here because you can see some pretty good models, even though it is basically in the middle of the night and we are in London session. There's good models throughout the entire night. Even when market is closed, there's models everywhere. There is possible trades to take absolutely everywhere. So let's play some action here. We create an SMT down here. When we create an SMT, this high should become an SMT TP. So this low should not get taken because the low of this SMT, which an SMT is a divergence between NQ and ES, which is this chart right here, which doesn't show anything because there. It's a divergence. So right here, ES would have actually made a lower low, while NQ makes a higher low. So this low right here is protected. We should not go back down to this low after we have a displacement up like this. And this is your SMT TP. So if we were to go into this fair value gap, I would take an entry. So here we make equal highs. This just makes it a lot more probable to go back up to here. And entries right here, your stop would be at this candle's low. And we come up to take that. So it'd be a winning trade right there. And then you could continue to go up. If we mark discount of this range right here, this could be another possible TP at discount of this range. You could also put another entry right here. And so we have another fair value gap here. You could put an entry right here to target up at this high. We also come down, sweep this low. This could be another entry if you wanted to. But you can also see this wick right here is really bullish. So we have massive candle up. Another fair value gap tap. Equal highs of the TP area, and then we take it. So now that this liquidity has been taken, this fractal is done with, right? And the way this works, just so you guys get a little better view of what fractals are. This is a fractal, right? This right here could kind of be a fractal. This right here could be a fractal. Inside of all these fractals, you could have this leg being a fractal, right? You got, right, this is accumulation fractal. These are all fractals inside of fractals. And you could think of all of this inside of one bigger fractal, right? Everything has moves inside of moves, models inside of models. So after this fractal's done. And now I want to wait for some more structure. All right, so now I want to possibly see this guy high get taken. If this high gets taken, this is a fractal completed. Right, it might not get taken, but it could. So we'll see what happens here. So go up a little bit. We're in another fair value gap. And out of this leg right here, we tap discount. We could possibly go higher. We also do have this 1 minute that has gotten previously respected. Right here it got respected. Most likely to get respected again. And did again here. We move up. And we create equal highs. So I do expect this to get taken soon. We don't really know when it'll get taken, but now that we have equal highs up here, it's a massive draw of liquidity, right? So now we have an uptrend and we're going into a macro. What do macros do? They reverse the move. They act as a reversal. So what I would want to see going into a macro is a possible market structure shift. So for that to happen, I want to see us close below a recent low. Right here, we're just kind of moving down. We're still moving down. A good example. So we have, this is a recent low, and it can happen a little before the macro too, right? So here's the recent low. We close below it, and then we retrace back up. Now on a smaller time frame, there could be a little fair value gap right here, and we could have tapped into it while closing below this low. But in this case, there's really no good entries because there's no fair value gaps that are created. The first fair value gap that's created is this one, this massive displacement down. So if you're feeling like it, if you see this massive displacement down, you can also see that we closed below this recent low right here. You could take an entry right in here. You could put your stop up here. This would be a 2.25 point stop, very, very low risk. And target this low right here. After we hit this low, We get a little displacement up here. Right, still letting structure play out. And after this, you could possibly take an entry here. This would be more of a lower quality entry. But the reason I say you could take an entry here is because we just swept this, this low. We also have tapped discount of this entire range. And right after that happened, we had displacement up. And then in addition here, after we take the entry, we actually come back down again, sweep this low, but we form an SMT. So this is very, very bullish. After I see all of these things combined, we got a liquidity sweep, tap into a 1 minute fair value gap, tap discount, strong displacement up, retrace the fair value gap, SMT created, strong move back up. This is all everything that's showing us that we want to go higher. The next draw of liquidity, I expect this to be this buy side liquidity up here. This SMT, or this is the SMT TP of this SMT. This should get taken before this low is taken. And we come right up to take it. We consolidate a little bit right here, tapping into this 1 minute for value gap, and we take out this buy side, which finishes out all of this model. And then that's where I want to wait for some more structure. So we're coming up, we take out this buy side liquidity. So now that's this model right here, that's this fractal completed. Waiting for more structure. Right here, we create an SMT. So this would be protected because we got displacement down right through here. We also have this 1 minute. I want to see this gets disrespected. And there we go. We take out this SMT. Well, we create equal lows. We take out the SMT TP. After we take out the SMT TP, we could either go lower or higher. We do have this. What is this? This is a 5 minute for value gap that we tapped into. We have respected it on this first candle. We are also in discount of this leg right here. I expect the next draw to be this protected high. And then that gets taken. Waiting for a little bit more structure here. So we create an SMT right here. We're also in a 5 minute fair value gap. This is a protected low. Here's SMT TP. The SMT TP gets hit. We're kind of consolidating at this 1 minute right here. But we are entering a macro. So now we're entering macro. We could either see, this is sort of an uptrend, so we could see a reverse to the downside or continuation. We have to watch for displacement below a low. So right here, we have sort of displacement down. We do break these lows, but this is a little bit more worrisome because we do have this SMT here, which is kind of bullish. We have this 5 minute for value gap that we've tapped into. We're also in discount of this previous leg, and we just had this move up. So we'll see what happens here. There's no entry to take any sort of shorts though, because there's no fair value gap. Not really enough displacement here. So we're still working our way back up, and we don't really reverse in this macro. It's okay though, we have a chance for another macro. So right here, we come down and we sweep this low. We tap into a 1 minute fair value gap, and we tap into discount of this move. We're also in sort of a downtrend going into this macro, but what the macro can do is the previous model that's before it, which is all of this combined, right? The macro will increase the probability of that model playing out. So what do we do when they hit the macro? Get displacement up. You can see these the PD rays right here have made this all happen. Get displacement up. I would enter in this fair value gap right here. So there would be my entry. My stop would be at this candle's low. And you also have standard deviation because these are two big candles that manipulated this low to then go higher. So I would draw standard deviation on here, And these would be your projections. We have the 2 to 2.5 area. This is where you can see a rejection off, possibly retrace to discount to then go higher, or we just completely ignore that, or it could also be a reversal to then reverse the move. So here we tap it. This could be possible first TP. You could also look at some liquidity in the past that aligns with it. We're at all-time highs though, so there's no liquidity. We then go down and we sort of sweep all these lows. Just a massive move back down. This would probably stop you out if you didn't TP right here. This is kind of why it is important to take some sort of size off when you get to this area, because look at this. Right when we got to the area, we kind of just displaced down and then came back up. This was also the 830 candle too, so you would keep that in mind with time, right? We move back up. We take our final TPs up here. So we'll make a high here, come down, we retrace to discount of this leg right here. We move a bit higher, and now that we got this displacement down, I'd actually wait for one more. There we go. This would be protected high. This would be SMT TP, so we should hit this before going back up to here. We get some more displacement down. We also have an order block right here. And we have premium up here. And what I would probably do, if I saw this candle right here, so the candle opens up right here. We come all the way up. We trade into discount. And we trade into this order block. And when we come back down, and you can see this wick shows that we respect it and that we want to go lower. Once this candle closes, that's where my entry would be. And my stop would probably be maybe at this high, you could put it, or even at this high, whatever you're comfortable with doing. I probably would put it at this high. And then we go down and take SMT TP. Still working our way down. Notice how small these candles are. We take out this protected low from this SMT. Still watching price. Now we're starting to sell off like crazy. Right, all starting with this SMT. So if you were still in a position from up here, you would be catching this entire move. Remember that. This short position right here, that's very easily identifiable by just simply an SMT displacement down, retrace to fair value gap and discount, or in premium. This would, if you were in this position, you would catch this entire move. That's why it's obviously important to identify what's up here. So now we just took out all of these protected lows, and obviously I just want to wait for more structure here. We're still selling off like crazy. And now we're back at the daily open. So again, remember this. We've traded above it the whole day. And now could possibly trade below it. We have this fair value gap right here that we have been sort of just consolidating inside of. You can also see right here, we have a downtrend, right? Then we enter this macro. What happens in this macro? Displacement up. We close above a recent high. You could take an entry in this fair value gap if you wanted. Right? Let's say you took an entry right here. You took an entry right here. You'd put your stop at this candle's low. You would not get stopped out. And you could also put a possible TP at discount. and see if we come back up to here. So we create a high here, we come down, we create SMT, waiting for displacement up. Here's your displacement up. This becomes a protected low. So we should go up to here next. We create this 1 minute for value gap, waiting for an entry. Here's your entry. Put your stop at the bottom of this 1 minute for value gap. You could also, I don't know why I have the stop loss here. There's no entry. I'll keep it there. But here could be your entry. Now I'm looking for this SMT TP. So now that gets hit. Work our way down a little bit. Now right here, we are entering a macro with a downtrend. So I would like to see some sort of reversal at some point inside this macro. We keep selling off. Slow down a bit here, and this is where we get massive displacement. This displacement closes above this recent high. This is your market structure shift. I want to see us retrace into this for value gap that's created. There it is. Here's your entry. Your stop loss is the bottom of this candle. And what do? We reverse the move. You can take one TP at discount of this move, which is probably around this daily open. And you can take another TP up at this high. And then possibly another one at discount, which you can see we beautifully tap and we wick twice. Now we create an SMT, looking for displacement down. Here's your displacement down. Massive displacement down. Here's the SMT TP that gets hit. Waiting for some more structure. We sort of build our way back up. I'm going to see what discount of this range is. So here's discount. Right here could be possible entry. I think that's why the stop is right here. With this entry, you could target discount of this leg right here. It would be pretty small though, so I wouldn't take that personally. So we create an SMT up here. So now we have two protected highs. Here's protected high here from the top of this SMT. Here's protected high from the top of this SMT. Here's your next TP that should get hit. It gets hit right there in that single candle. Another massive displacement down. After this, you could try to take an entry in this for value gap to maybe target this low. But be careful because we are in a 1 minute. So we tap that, head a lot lower. And possible TP at discount right here. Because what price wants to do, after we have a move like this, we want to rebalance down to discount. That would probably be your motive for taking this short right here. Sell off a little bit more. And then we enter macro. So right here would be market structure shift. You could take a position in this 1 minute. The only scary thing is that right here we create an SMT at these two highs. So this would be a protected high. This would be SMT TP. This model right here is stronger than a macros model. So probably would trust this right here. But honestly, if it was me, I would just not take a trade in this. I would just stay out of it. Right here, we take this SMT TP. So now let's see what happens. You can see again right here, another market structure shift. What do? Just completely ignore it. So we're not wanting to go to the upside right there. And we just keep selling off. Just constantly selling off. little rebalance right here, sell off again, just all consolidation. Sell off to this low. Here's the weekly opening. So right here, now that we're entering this macro, this is 315, 345 macro. This is a really, really nice macro. If we've had a massive move like this macro could actually be pretty useful. So we have this SMT right here. There's displacement up. If we were to create a fair value gap in here to target this high, I would take it. But we don't. We just take this high. And then right here, we create a fair value gap. Looks like we're wanting to head to at least premium, probably this TP. Here we go. We tap this 1 minute fair value gap. Now you could also put your entry. Oh, that's why I had it here. So you could put your entry in this 1 minute fair value gap right here, or this 1 minute fair value gap. That's all personal preference. That's why I have this here, because I put it in the middle. You could put it here though. After you see that we come down, we come back up and we respect this, you can put an entry in right there. I would definitely put an entry right here at this candle close to target this high. And the high would instantly get targeted. Then we come down again. Here's another SMT created. We come up. I would probably take another entry if we closed right here, because look at this. We're respecting the 1 minute, just created an SMT. We should go to the upside right here. There we go. Massive move up. After you see this massive move up, here's a prominent high that we displaced out of. Here could be an entry, and you could possibly see a lot longer from this. We also do have this leg right here that came down, swept this low and this low. This could be manipulation. So this would be standard deviation projection. We hit this 2.5. Now we might retrace down to discount, or possibly the 1 to 1.5. We go to the 1 to 1.5, and then we end up moving higher, and you would take your final TPs at this 3.5 to 4. I'm real quick gonna label those. So here would be 1 TP, and then up here would be a second TP. So now this is where the day is basically over. Not much should really happen, and we probably just consolidate the rest of the day. Unless we move down to these protected lows, but we're really not going anywhere, so that is where I would stop looking there. So now what I'm going to do, I'm just going to go through a good amount of the models and just go over them again. Alright guys, so here I am with all the examples, or with only the examples out of entries. So, get rid of this. So right here, first example, we create an SMT at this low. This is very early in the morning. Create an SMT here, just strong displacement up, equal highs are created, enter into this fair value gap, and stop down here, we buy up, and then we come up here again. You could possibly take another entry in this fair value gap, stop at this candle's low, or maybe just add to it, right? Add to your position, and take off at this TP. Then down here, we sweep below, we tap into discount, tap into a 1 minute fair value gap, we have strong displacement up, and then this right here, this is just market structure shift downwards on a previous move to take an entry down to this low. So here's like an entry right here you can take to take this low, and then after that low is taken, you got a new model forming. So all that, we have an SMT formed, tapping into a 1 minute fair value gap, and displacement up, take out this SMT TP. You could also add to your position right here to then take out a TP at this buy side liquidity. Over here, we have a sweep of this low. These are manipulation candles. You tap into discount of this previous leg and also tapping into this 1 minute. Displacement up. You could take a possible entry at this 1 minute for value gap. This also sort of acts as a reverse of the move, right? This is your reversal point. The macro is in correlation with this reversal. Here could be an entry, stop at the candle's low. Your first TP can be at this 2 to 2.5 level on standard deviation. And then after that happens, you can see we come back down. And then second TP could be at this 3.5 to 4. This is catching a bigger move. So very, very high up in the markets. We have this SMT that's formed, protected high here. We slowly move down. We come back up, enter in this order block, which I do like this order block 1 because there's an inverse order block. We have all these up candles followed by this one red one, which is aligned with this white one. We also tap into discount of this range, and we respect it nicely. So your stop would be at the candle high, just a very, very tight stop, but with a super tight stop, you can go down, catch this SMT TP, and this would be the entire move that you get from that. We go down, take all these previously protected lows, which are draws of liquidity. And then at the bottom of this move, starting right here, we get displacement up. You could take an entry in here because you are in a macro. So this little displacement up, chances are it's not just a retracement. It's an actual reversal point. So you can take an entry right here, right? Stop at this candle's low. We buy back up, form a high here. We come back down, tap into this 1 minute again, form an SMT right here. You could also add into your position if you want after we get like this candle closed right here that this SMT is formed. We come back up, another minute for value gap formed. You could put an entry here, stop loss at this candle's low. This would be your TP because that's what's formed from the SMT. We come up, take it, and then we sell off to take out this protected low and this low right here. And you could also put an entry in this for value gap 2 if you wanted to. And then right here, after this happens, a continuation of this move, it come down, take this protected and sell side, and then since we're in a macro, this could be a reversal point, right? This would be your high that we displace above. 1 minute for value gap created here. This will be your entry, stop at the candle's low, and we come all the way up. And you could take a TP at these for value gaps and also this high right here. This high then enters a bullish or a bearish for value gap. We create an SMT. This could signify a reversal and it's inside a macro. We get displacement down. Here could be one little entry right here. But as you can see, we kind of just come down, come back up. We form another SMT here. Another protected high formed. SMT TP, we come down. Again, we have a candle we can enter into. There's this for value gap that's formed, stop at the high, and we sell off. You could take a TP at discount here, but this is the entire move that happens. We have some more structure inside of here. Entire move that happens. We take all of this sell side liquidity from probably previous days. And then last example here, after we take that, do a little bit of a retracement at the end of the day. So here's your SMT. SMT TP gets hit. We come do a little bit of retracement. We respect these 1 minutes for value gaps. You can put entry in here, right? If you put an entry into this 1 minute right here, maybe when this closes, you'd come up, take your TP. Price would come back down to your original stop. You'd probably get stopped down some contracts. Then let's say we had this SMT formed. You see it respects this 1 minute. You could enter in long and ride this all the way up. You have this SMT TP. Continue to ride it up. You can also add or enter in this for value gap right here. And we ride all the way up to this 2.5 area. And finally this 3.5 to 4 area. So guys, that is all I have for this chart annotations review for episode 9. And I'll see you all in the next one.